Alright, so let's do a quick review. Start off from scratch. Obviously the daily is down. And you see what happens. This was a breakdown here, tested, retested, and broke some more. So it's just break, 1 test, 2 test, 3 test, break. So here again, you had breakdowns here, they get tested, they attempt to break, cannot break, come back, test, and break. So bottom line is, as long as these breakdowns are occurring and they're testing and rejecting, the trend is down. All right, now let's take a look at the brick size and take a look at some trades. First is this was a bit interesting. I don't know what they were trying to do, but it seems like it's a test of this breakdown. This big wick breakdown. Tested it, and then selling. So let's just see how this thing occurs. First thing is, you want to analyze the trend first and the levels. So however you want to analyze the trend, there's many ways to do it. Basic tools, more complicated tools, whatever. All right. Then where the initial breakout was somewhere around here, and then here. This is a significant volume. I'm not sure if this is a breakout because it had reversal action, but this break has the most amount of volume in the entire down wave when it broke this low, and now it's like testing and retesting. So I'm not too sure if this. You see, this is very difficult because you see a break, but it has no follow through. So sometimes there are breakdowns like that. Other times there could be climaxes and minor climaxes. Anyway, so we'll just take a look at this strong buying wave. And of course, that's where the trade happened. Right? Tap, then breaks, and right. So this is some type of breakout and test the breakout. This test of the high bar in this area, test of the low bar in that area. So we'll just take a look at some trades. Here, there's a lot of price volume action. So this will be your rally, but it was taken out, so now you have a rally down. This is your rally. This is your breakout test. That's your rally. That's your rally down. That's your test. Anyway, what does this mean? The trend is clearly down from the daily, but I do want to isolate that piece. All right, anyway, so the last trade was up here on the test of the high bar. So why is this really, really important? You must coordinate the higher time frame with the lower time frame. Why? Because let me say it like this. On the lower time frame, you'll have many places that have high price and volume, right? But they will not be changes of behavior or sign of weaknesses. You can have many places that have heavy selling pressure, but they are not the sign of weakness. It is only when you combine that selling pressure with higher time frame support and resistance level that you are able to more accurately predict a change of behavior. All right, so the price volume behavior on the lower time frame is not enough to say this is a change of behavior. It could be something else. What you need is an extra piece of data. That extra piece of data is a higher time frame level, preferably a support resistance level. So using those areas of support and resistance, you are more able to accurately identify behavior on lower time frames. The example here is, okay, you have a test of the high bar right here. What happens? One. That's the biggest price volume wave in 21 waves and 49 waves. So at resistance, you have selling, which means what? Which means they're not ready to break out. So if at resistance you have selling that is not met by strong buying, it will continue to go down. Price will continue to go down. So here, you have your change of behavior, your confirmation on a low, and now you get a deep pullback that tests, and you get a small move down end of the day. That's one example. Over here, we go back here. This is difficult because it's a rally down on the bearish perspective, but from a bullish perspective, it's a spring. So in either case, we'll analyze and see how the turn occurred. So you can see that as the higher brick size is going down, we're taking a look at the trend on the lower time frame, and when it gets to, there's multiple confluences here. Yes, it could be a rally, a bear rally. Yes, it could actually be a bullish spring. Yes, it could actually be a test of the low bar. So there's a lot of interpretations. I really don't care for them. All I know is that at these levels, what is occurring? And you will see that at that level, you had again change of behavior, test, slight takeout of the high. So what does that mean? That means you have buying off of a support level. You have buying pressure coming off of a support level. The likelihood of this being a change of behavior now has automatically increased, because the likelihood of a change of behavior increases at support and resistance levels. Bullish change of behavior at support level, bearish change of behavior at a resistance level. Again, the likelihood of heavy price volume action at higher time frame levels increases the likelihood that the heavy price volume behavior is a sign of strength. If it's coming from support, sign of weakness. If it's coming from resistance. All right, so this, that, does that, and finally you can use internals or whatever else as a confirming indication. And I know that because I know right here is buying pressure. So that buying pressure is met by market buying pressure along with market advances. All right, so at that support level, bang, pressure, 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 you're all set. Especially here, it's even more pressure coming in. It's a very obvious edge. It's not even edge, it's just reading data. I guess you could call that edge. All right, boom, boom, boom. Where are we? So the next one I'll analyze is on the test of that breakout. So again, here you have the breakout and pullback. You see this wave on the hybrid size right here on the chart in the upper right hand corner? It's the biggest wave in 21 waves, and now it's pulling back to test. As it tests, what do you get? Right there. Buying pressure. And this is a bit early on, so I can't really have all the correct info because it's the data at the morning is difficult. It's not there. So. But it's very, very clear that as the market tests, you got buying pressure. What is that? That is a change of behavior, also known as a sign of strength. Here, on the other hand, when it goes up like that and you have heavy price volume selling, you don't know what this is. You don't know what this is. It could be a sell, stop run, to buy it and go up. You don't know, let me be clear, you don't know if this is a change of behavior or not. But if you look in the background, it will give you a better idea. Because here you see what? A breakdown. Right there. See this breakdown? Where I've circled? That gets tested. As it gets tested, you have selling. So relative to that, you can now say because it's coming off of a higher time frame resistance level, the likelihood of this being a change of behavior increases. It goes down. So what am I doing here? The point here is very clear. The lower time frame has many waves that have a lot of price and volume, a lot of selling and a lot of buying. But the question is, how do you know if that heavy buying or selling is a change of behavior? How do you know? What is the data point that tells you that this is a change of behavior, aka sign of strength or a sign of weakness? What is the data point? Can it be something else? Can it be short covering? Or something else, anything else? Sell to buy, buy to sell, stop run, blah blah blah. Right? So you need a way of identifying the behavior that the heavy price volume action means. What behavior is it? Because heavy price volume can be many things. How do you know it's a change of behavior? The filter or the data point that tells you it's a change of behavior, sign of weakness, sign of strength, is the higher time frame support and resistance level. Specifically, the higher time frame turning point, which is the support or resistance level. That's the turn, the turning point, the pivot, etc. That is the support and resistance level, obviously. And at that point, on a test, you want to see if those buyers that created it are still there. Those sellers that created the turning point are still there. And only then you look at the lower time frame to see if that sign of strength or sign of weakness occurs at that support or resistance level, meaning does that heavy buying or selling still exist there? If it does, then that tells you that they're there and you can ride their coattails. So, trying to be very specific here. If you want to combine that next with something else, you can do it. You can combine it with a number of things. You could use internals. You can use what else? Stocks or other indexes. What you don't want to do is use the same derivative of the same price volume action that you're looking at, because you already have that data. You need something that's not built off of the same data. That's why using multiple indicators, price volume indicators, doesn't make sense because they're all correlated. So if one says buy, the other one will say buy. So why not just use one? You want to remove the redundancy. Anyway, let's break it down even more simpler. Mark your levels, support and resistance, and see if there's heavy buying and selling pressure occurring. If there is, that'll offer you an edge, because that buying and selling is a sign of strength and a sign of weakness. You can add other things to that. To help confirm, but it's not necessary. I don't believe it's necessary. It's more of a confidence booster. All right, I'm done.